Hello guys, welcome to the Solid as a Stock session. Hopefully clue is in the name as to what we're going to be going through. It's going to be stocks, so that's what we're going to be focusing on. Now before we start, let me just make sure that we cover the disclaimers. So there they are, top left. Of course, always important legally for us to show these disclaimers, but also important for you guys to understand that these kind of videos are demonstrations and not necessarily indicative of results you may achieve or achieve. So my name is Becky. My email address is down here, becky@traddictiv.com. We'll do that again. And we've also got support@traddictiv.com, so you can use those emails if you need to get hold of me or if you have any questions on what we cover. Let me just explain real quick what it is that we go through in these kind of sessions. So we'll go through the current market environment, look at closed trades or trades that are still open, how you might have managed those trades from previous sessions, and then we'll look at some new opportunities as well. Now, we are currently streaming in multiple places at the same time. We're streaming on YouTube and LinkedIn and Facebook and loads of other places. We keep adding them all the time. Now, most of those are, of course, free ways that you can access these kind of sessions. But there are also people that are paying a small monthly fee for our closed coaching community that are also accessing these sessions. So how do we balance that? Essentially, what we do is after around about the halfway point, which in these kind of sessions where we're looking at real life trades, in these kind of sessions, it will be after we've found at least one trade, we will cut off the stream to the free streaming areas and we will continue in the closed coaching environment. So the people that are paying the small monthly fee for our coaching environment get access to more of our time in a closed session. And we'll cut these off around about the halfway point after we've found at least one trade. So for those of you watching free, you'll still understand the methodology, you'll still see a live trade placed, you just won't see the entire session, basically. Okay, so let me just make sure I've got my chat boxes up. I want you guys to ask questions. The more you guys ask questions, the more helpful it is for me to have an idea of what it is that you need me to explain more or less, what it is that people are getting or not. So the more you guys can interact with me and let me know and ask questions, the better. So if you can, please do. Now, just before we start, one more thing to cover, which is if you come to tradewithufos.com/Becky, get yourself a free Trade with UFOs membership if you don't have already. Coming down here and posting questions in this area is the best place to put them because it means other people can see the questions as well. And then when I answer them, other people see the answers. So it's a good way for everybody to learn from the same area. If you're comfortable to post your questions there, please do that. Okay, so what we're going to do first is have a look at trades that we had before. Now, I'm just going to get up my list so I don't forget which ones we looked at. So this one was Tesla. This was placed on the 13th of August. That was the last stock session that we had. Now, as you can see here, this could have been a losing trade. It also could have been a cancelled trade. Depends on how strict you are with what you do. And let me explain and expand on why. Now, before we do that, just to show you very clearly, this black line was our entry. We were going long, we were buying. This red line was our stop. That's where we would have got out if we were wrong. We had a green line here. That was our first target, our safety target. And another green line here, which was our final target. So if price would have gone in our favour, that's where we would have taken profit. Now, and as we can see, we placed it around about this time and price went through this. So this would have been a losing trade. However, if we have a look at this, we placed this on the 13th of August. So it's a Friday we placed them. And we placed them sort of in the early afternoon US times. So depending on the style of trader you are, depends on whether or not you would have got into this trade. And here's why. If you are day trading stocks, or even if you're short-term swing trading stocks, and you have a rule that says you will not get into trades on a Friday, for example, because you don't want it hanging over the weekend, or perhaps you have a rule that says that you close out every day and you wait until the market open the next day and you put it on then, so that you're not exposed to overnight risk. There are some traders that do that. Then what would have happened here is on the close, on the 13th of August, which was a Friday, on the close, you wouldn't have been triggered. So if you were checking into this trade before the close, then you would have perhaps cancelled that trade before it triggered. And then the next morning, this data here is sort of pre-market. The next morning, it would have opened around about here and then gone through. So you could have missed this trade by closing it out the night of the 13th. Which again is what some traders do when they're stock trading, is get out of pending positions the night before, like the market close, so that they're not exposed to overnight risk, especially over the weekend, so they're not exposed to the weekend gap risk. If you just set it and forget it and you put it in and you leave it, then this would have been a losing trade. You would have been triggered round about this point here. That's when you would have been triggered. So you would have been triggered about halfway into this area. Now, if you were watching it on the day, then on that day, as you can see, we would have had a different autoclimate. We would have had a different probability rating there. So you may have cancelled the trade at that point and lost, but lost half of what you were willing to lose. So let's say, for example, if the total between here and here was 100, then maybe by getting out at that point, you lost 50. So it's still a losing trade, but you lost less. Again, if you completely just set and forget it and you look at this every few days, which isn't advisable if you're using a daily chart for your autoclimate. If you're using a daily chart for your autoclimate, you should be checking in at least once a day. But let's say you didn't do that and you left it and you didn't come and check it on that day, then a flat out loss of $100. So the best that happened, depending on the way you manage your trades, is that you didn't get into it. And so you didn't win, you didn't lose, nothing happened. The worst that happened is that you got a flat out loss at your full stop out, whatever number that is for you. Or round about the middle is that you might have got out as it triggered and you would have lost half of what you were willing to lose. So best that happened is you didn't get into it. Worst that happened is you lost your full amount. Somewhere in the middle is you lost a little bit. So that's how that trade would have gone, and that's Tesla. So let's get rid of that one. Now let's look at Facebook. That was another trade that we put on last time. Now, this trade would have been a break-even trade and or a profitable trade. So let's have a look. And again, I'm giving you different examples because we all have different rules as to how we manage our trades, depending on how much time we have, how risk averse we want to be, or how risk tolerant we are. For example, closing trades before the close of the day stops you being exposed to the overnight risk, but also could mean that you get out of a trade early and you miss out on the profit. That could happen. Closing out over the weekend, same thing. You could also have situations where you change or you get out of positions based on a change in climate or not. Or you might get out based on a change of if new UFOs appear or not. It's okay, however you manage your trades. Those of you that want to be really, really risk averse and close out every night before the next day, so you miss out on that overnight gap risk, great. That's a more risk averse way of doing it. That's great. You keep doing that. If that's comfortable to you and that's what makes you feel more safe in the markets, do that. You might be somebody that says, no, I set it and forget it, I'll leave it, I either win or I lose. That's fine too, but keep doing that. Don't sometimes do one and sometimes do the other, because then you're not being consistent. Decide as a trader who you are. Are you more risk averse or are you more risk tolerant? And then you can have an idea of what is the best way for you to manage your trades in a way that you will consistently enact, so that you're not chopping and changing what you do all the time. So with this one, we placed it on the 13th of August. It triggered, would have triggered at this point. So it triggered on the 16th of August. 16th of August, we still had a thick blue dot, so we still had probability upwards. By the end of the day on the 16th of August, we hit our first target. So we hit our safety target. We normally in these sessions assume that we risk $100 in total. So by hitting 1-to-1 on half the position, you make $50. So at that point, so far, you're up $50. Then obviously price came against us and stopped us out here. So we would have made 50 and then lost 50, overall break-even trade. However, as you can see, the next day when this happened was the 17th of August. On the 17th of August, we had a climate change. So if you get out of positions based on climate changes, i.e. the climate is no longer doing what it was when you got into the trade, then you may have got out and closed out here and made $10. And so you made 50, then you made 10, you made 60. Overall, profitable trade. Worst that happened is that you had a break-even trade. So in this case, worst that happened is you had a break-even trade. Best that happened is you had a slightly profitable trade where you would have got out at your safety target automatically and then manually chosen to close at a profit round about here because you looked and you checked and you saw that the autoclimate had changed and was no longer in your favour. So that's Facebook. So far we've got, if we take the worst of all of the situations, so far we would have had a losing trade, which also could have been a missed trade, but let's call it a losing trade. And in this case, could have been a profitable trade, let's call it a break even. So far, a loss and a break even if we take the worst of every situation. If we take the best of every situation, then we have a missed trade, which didn't account for profit or loss, and a profitable trade. So again, depending on how you manage your trades and how strict you are, depends on what the outcome would have been for these. Now the last one was the QQQs. I think this one was an out and out loss, depending on, again, when you got in. But I think, yeah, this one would have been an out and out loss because it happened that next day. Oh no, there you go, it depends. So let me show you here what I mean for this as well. So with the QQQ, we got in on the 13th of August. On the 13th of August, we had a thick blue dot, probability upwards, so we were placing this trade to go long. The next day, it would have, when the market was actually sort of open, we would have triggered here, and by this point, the auto climate was different. So if you're a person that tracks this, and you would have got up in the morning and you would have checked this to see whether or not the auto climate was still in your favor by this point, then you may have cancelled the trade once it was already in or before it got in, and again it's essentially a break-even trade. You would close it around about the price that it opened at. You might have made a couple of cents or lost a couple of cents. You may be somebody that doesn't expose yourself to overnight risk, in which case you never got into the trade. If you were somebody that just left it and you didn't look at these things, then you had a losing trade. So again, hopefully you're seeing my point that different ways that you manage these trades, depending on how strict you are and whether or not you do look at it every morning when the US market opens, whether or not you do cancel your trades before the end of the day or before the end of the week so that you can replace them again the next day if the opportunity is still there, or not be exposed to it if the opportunity is gone. Depending on how strict you are with these things, depends on whether or not you had two losers and a break even, if you just left it entirely, or two trades that you weren't in at all and a profitable trade, depending on how strict you are to manage these things. So hopefully that makes sense. Again, ask me questions in the chat boxes if I say anything that doesn't make sense, but hopefully you're with me so far. So those were our three trades. Facebook, we had the Qs, which is an ETF of course, and we had Tesla, and that's what happened to each of those trades. Now what we're going to do is look at some new trades, and what's exciting about this today is we're going to look at some new trades using our new platform called TOP. Stands for Tradictive Options Planner, but it's TOP for short, and also it's a top platform, so that works. So what we'll do first, before we get onto that, is we're just going to check the weekly economic calendar. And again, how you use this will depend on, or the type of trader that you are. We're coming to the weekly economic calendar, and I've filtered by US markets, because we're going to be looking at US stocks, and by high impact news. Essentially, what news is coming out in the next week? That's what I filtered by here. What news is coming out in the next week? Although actually this looks like let's do the end date as September the 3rd. So it is a week. Let's do that there. There you go. So what's coming out in the next week in terms of news that is likely to have a high impact on the US market and therefore might change what they're doing, might add volatility. Volatility increases your risk. If you're on the wrong side of volatility, it can be bad for you. If you're on the right side of volatility, it can be good for you. So it can also increase your reward. Again, depending on who you are as a trader, it will depend on what you want to do with that. So we want to look, again, just so that we're aware, that Friday, today, that's already happened actually, that's already come out, so we don't need to be concerned about that. Oh no, this is US time. No, this is GMT. It's already come out, we're fine. Saturday, we won't be in a trade anyway. Wednesday, next week at 1:15, this is British summer time, so this is right as the US markets open, and then an hour or so after the US markets open, we might have some news Wednesday, September the 1st, that could impact the markets early on US hours. So bear that in mind. You might want to be out of trades by then. You might want to close out of a little bit of a position by then. You might want to cancel pending trades by then. You might want to just leave it, depending on how risk averse or risk tolerant you are. Okay, so let's come to TOP now, which is exciting. Let's have a look at this. So TOP, just for you, those of you that might not have seen it yet, TOP is like any other platform in the sense of we can see our charts, we can put in our auto climate and auto UFOs. It's actually all integrated in it because we built it, right? What it has as well, which is really brilliant, and why I want to be using top from now on actually to filter by what we want to look at, is it has a great way of scanning for opportunities based on our methodology. Now, you can apply our methodology to most platforms, platforms that use our technology, of course, but with top, it's all integrated, and again, it just makes it a little bit easier if you are following this methodology. Again, you don't have to. You can use TradeStation, you can use MetaTrader if you're obviously trading Forex, and you can use TradingView as well, which is obviously what a lot of people use TradingView. We will still use TradingView to show the execution, just so I'm showing two different platforms that you guys could use, but I'm going to use top to do the majority of our analysis. So what we're going to do is we are first going to come to our matrix on top, and what we're going to do here, this is going to be where we place our scans. Now what we're going to do first of all is we're going to tell it that we want stocks and ETFs, so we want to look at both of those. We're looking at US stocks. I'm going to put a minimum price in of $15, because that's similar to the other scans that we use on TradeStation, and we'll leave the minimum average volume at 300,000. I'm then going to add some additional filters. So what I'm going to do first of all, before we do anything else, is just come over to the Auto Climate tab, because this is the bit that I think is really cool. If you are using Auto Climate to help you decide whether or not you buy or sell, you can look through each individual stock if you want. You can have a watch list and go and see what that Auto Climate looks like, or we can filter, so we will only look at ones that are near to opportunities and that are confirmed. So what I'm going to do here, I'm going to check the Auto Climate box there, and we're going to be looking at daily charts for our common time frame, which means 55-minute charts for our smaller time frame. But let's take a look at this. So we have daily chart on the top here. We want it to be confirmed up, and we want it to be sensible, meaning it's got to be in a situation where probability is upwards and we still have room to go up based on what usually happens. We also, as part of the methodology, want to be close to the 9 EMA, because that's one of the things that we need in order to line up our variables to get into a trade. By the way, if this is the first one that you've ever watched and you don't understand what I'm saying, don't worry, I'm going to expand on this a little bit as we go. What we also can do here, which is really cool, is we can say that we want the bigger time frame, in this case the weekly, to also be confirmed up. And let's say we want this one to be early, meaning if we're kind of towards the start or in the middle of a daily move, great. What if we're also right at the start of a weekly move? That gives us a lot of room for it to continue to go up, which is great if we want to be buying. Now, by the way, we decided that we're already looking to buy based on the general market overview, which I'll show you in a second. What I'm going to do here is just come over to earnings, and I want to exclude stocks that have earnings coming out within the next 5 days. If we're using daily charts for our common time frame and 55 minutes for our entry time frame, then we're likely to have trades open and close within a few days. So as long as they don't have earnings coming out within the next 5 days, I'm going to be happy with that. And I'm going to click scan. And now you'll see if I hide that, we've now got a list of stocks that follow that criteria, which is pretty cool. So then what I can do, if I group this with the same thing there, I can just click the top one and come over here and look at what's going on this market, which is pretty cool. Now, I want to make sure that I've got the, if I do 55-minute there, brilliant. I want to make sure that I'm looking at the right data. Now, before we have a look at this, I'll come back to the scan in a minute to do this. Let me just show you why we're looking for stocks going up. I'm looking at the ATES. This is the futures contract that represents the S&P 500, which is the top 500 US stocks. In a nutshell, we are looking at the US stock market, okay, as a whole. Why do we care what the US stock market is doing as a whole? Because if the US stock market as a whole is going up, and we look at individual US stocks that also have probability going up, then we've got correlation on our side. If the stock market as a whole is going up, and the individual stock that we're looking at is going down, well, it may be that the tide of the greater market will pull this back up, and therefore the individual trade that we're in lacks a certain amount of probability. It doesn't have to be correlated, but we prefer it to be. So I came here earlier and looked at a daily chart on the S&P and could see here that we had a thick blue dot. That tells us we have probability to the upside, which means we want to be looking for long opportunities, buying opportunities, which is why we came to our matrix and looked for opportunities that were, in this case, auto climate confirmed up. Okay, cool. So I'm just going to click scan again, and we clicked on this one, which is the first one, and we'll go through each of these scans. And then what we can do, if we don't find anything here, we can go through some ETFs specifically and have a look at perhaps different time frames. So here we have Axalta coating systems. This is what I love about using technology to trade, and some of you will really disagree with me here, and that's okay, is that I don't actually need to know much about the stock itself, or about the company, or about the country if I'm trading a currency, or about the fundamentals of it. I don't need to know any of those things, because the reason why I'm trading is because of what the data is showing me in terms of where I have probabilities, which means I can be trading something I've never heard of before and still have probability on my side, which is great. It saves some time anyway. So with this one, we have a confirmed upwards climate. Now, for those of you that are newer, let me just be really clear on what we mean by that. When we want to trade, we want to be looking firstly at, should I buy, sell, or do nothing? That's the first thing we want to know. We use technology to help us with this, and we're using our auto climate to do that. Auto climate gives us a series of dots and lines, ignore the lines for now, gives us a series of dots that tell us where the probabilities are. So if the probabilities are up, we should probably look to buy. If the probabilities are down, we should look to sell. If the probabilities are nowhere, or not strong enough either side, then we do nothing. And that's it, it's as simple as that. So our auto climate is showing us, it's slightly harder to see perhaps than the other platforms, but it's showing us a thicker blue dot. That tells us probability is to the upside, meaning we should look to buy. So first things first, we have a check mark, we should be looking to buy. Now, we had filtered on our scan anyway by stocks that do have confirmed probability up on a daily chart. So not surprised to see that that is showing us that. Now, the second question is, if I buy, where? If I sell, where? This is where we use other technology, which is these guys here, our AutoUFOs. AutoUFOs show us where buyers and sellers are. That's helpful because if I want to buy, I want to do that where there's lots of other buyers. Why? Because if there's lots of other buyers, they are likely to push price up. The only way price can go up is if there's more buyers than sellers. The only way price can go down is if there's more sellers than buyers. So if I want to buy where there's lots of other buyers. And the UFOs show me that. The AutoUFOs show me that. Where are the buyers? Same for where the sellers are. The red UFOs show me where the sellers are. That's where I would sell if I was selling. So hopefully you're with me so far. Now, the third thing that we then want to figure out is, if I buy, where do I buy? We have multiple options. This is where the 9 EMA comes in. That's what this is. This is a number that is showing us, basically tracking for us, the average of the last 9 candles. It's an EMA because it's an exponential moving average. Moving average meaning it moves with price. It's an average of the last 9 candles, and it's moving as price moves. It's exponential because it puts more weight on the most recent candles. So with that, why do we care? Because at this price, at this EMA, at 30.8989 on this particular stock, let's be more specific, let's do 30.90, let's round that up. We are likely to get buyers at that point, because if price is above the EMA and then comes down and hits it, loads of people all over the world will buy it. That's their strategy. And that's fine, because it's adding buy orders into the markets. Now, what if that number also coincides with other buy orders that are unrelated in the context of a market that has probability upwards anyway? What we're doing there is we're adding buyers, buyers, and buyers. 3 lots of buyers. That gives us more probability that it goes up. Now, you could be somebody that says 2 out of 3 is fine for me. I'm just going to use my auto climate and the EMA. That's it. Or I'm just going to use my auto climate and my AutoUFOs, and that's it. For us, we like to add in this extra third dynamic here so that we're adding in extra probabilities. Which is why on our matrix, when we did our filter, we filtered by stocks that had price close to the 9-period EMA on the daily chart. because it means we're not going to be looking at trades that are really far away from a potential entry price. So what I'm going to do now is I'm going to get a line here. In fact, let's not use that line. Let's do one of those lines if I can, on that one. That one. Oh no. Sorry, my mouse is being weird, so I'm not able to look at these things. So I tell you what, we'll ignore the lines for now. We'll come out of that. So if I just get that back up again, that should be okay. I've still got my drawing tool on. Okay, that's my bad, guys. I've pressed the wrong button there and my mouse is being weird, so I can't get out of this drawing. There you go. There you go. Been able to do that. Delete it. Brilliant. So what I was gonna do is just draw the line of where that price is, where 30.90 is, so we can see if it falls inside this UFO here. But what I'll do instead is I'll just click the side there and we can see from the top that the top of this area is 30.60. That's where we have the start of our buy orders, and the EMA number is 30.90, which is up here. So if we do that, if we have 30.90 is where the EMA is, but this doesn't start until 30.60, then those things aren't lining up. Which means although we have a confirmed upwards climate, although we have buy orders, we don't have buy orders lining up with other buy orders. So for us, we don't have enough probabilities lining up for us to take this trade. So we move on and we find a different opportunity. If you're somebody that has slightly different rules, or you're okay to just have 2 out of 3 checkmarked, fine. For us, we need 3 out of 3, so I will move on and find a different opportunity, hopefully, on our matrix. So let's bring that back up. So we looked at that top one, didn't get anything there. Let's look at this one, MTG. Okay, so same situation here in that we have a confirmed upwards climate, probability upwards. From having a quick look, it looks like we won't be getting into this trade either, and I'll tell you why. We have 15.0456, which is here. This is where our EMA is. And our buy orders don't start until 14.95. So they're close to each other, but they're not overlapping. Now, what could happen here, and perhaps we'll come back to this if we don't find another opportunity. What could happen here is, let's say price moves down. Bearing in mind this is a moving average, right? It moves with price. So if price moves down, the EMA is likely to also move down. So depending on the rate at which price does fall, if it does fall, and whether or not this EMA follows it at a similar rate, it may be that the two do coincide within this UFO, in which case, yes, we place the trade. So what we can do in situations like this is place an alert, again, on whatever platform you're on, place an alert around about there when it's close enough to really be able to call it, and see where price is relative to the EMA, relative to the UFO. If you can see that it's lining up, great, place the trade. If it's not lining up, don't place the trade. So what we'll do is we'll look at different opportunities, and then we might come back and place this just to keep a track on it and see whether or not we would get into this trade at a later point, and we would have a look at how that worked out. Okay, so back to our matrix, and we'll look at the next one. I'm going to call it acre. I'm going to assume that that's how we say it. I'm not sure that that is the real term for it, but okay. No, we don't have an opportunity here, and I'll explain why again. We have a thick blue dot, probability upwards. We have our EMA at 15.27, which is here. This UFO is above that, so as price falls, so too will the EMA, and it's going to move further away from the UFO. So we don't want that one. We'll come back to our matrix and have a look again. H-band, we'll call it that, and see what we have here. Okay, no opportunity here either, and again I'll explain why. Because we have thick blue dot, yes, probability upwards, however the EMA is 15.1033, so call it 15.10 is there. Again, not lining up with this UFO, and price is a bit far away really to track whether or not it would line up later down the line. So we'll come back and we'll have a look at this last one, AZN. What we might do is come back and maybe be less specific on our scan to see if we have some other opportunities. So with this one, this looks 58.983. We've just crossed the EMA line. So we wouldn't be placing this trade anyway because the price is just below the EMA. If we want to be going long, then we want to be just above the EMA. So price has literally just moved in the last couple of minutes below that. So we don't want that. So what we'll do is we will come back to here. Let's go to our additional filters and let's turn off the weekly ones. That would be great if that lined up, but it's not absolutely necessary. So if we turn off the weekly, that gives us a much bigger list, So what we can do here to maybe filter it down a little bit, I'm being a little bit picky here, to filter it down a little bit, I might add some stock filters and say that I want the rotation or strength to be up for the last 3 days, long term and medium term. Let's do this and see what happens there. That takes everything out, so let's take that off and scan again. So what we'll do is we will go through this list top to bottom, and hopefully we're going to find something that lines up. So let's do this. So TS is the ticker symbol. Tenaris would be the name of the company. I'm going to go through it really quickly so we can get a trade on as soon as possible. Not lining up here because of the EMA and the UFOs again. No problem. Sometimes this happens, and again, we'd rather know that we don't have probabilities and not place the trade than place the trade for the sake of it and end up losing. This one, again, too far away, although we're going to remember this KIM. It might be that we have we have a situation where, so this is where the EMA is now. If price were to fall, the EMA is likely to fall. And it's likely to fall and meet price somewhere within these two UFOs. So we'll use this as a backup trade. It's better than the other one. So we'll use this as a backup trade if we need to. But in the meantime, let's see if we have something lining up perfectly, because that would be a great thing to show you. We already looked at AXTA before, and we obviously saw that there wasn't a opportunity there, but we're going to remember Kim, and we'll come back to that one if we need to. Okay. This one, again, EMA and UFO not lining up, so we move on. So again, I'm just going to bounce through these really quickly so we can find the best type of trade if we can get in. Again, EMA, UFOs not lining up. No problem. CLI. And this is the cool thing about the scanners, is that you don't have a watch list that you need to go through that's got loads and loads on. Again, these things aren't lining up, by the way. You don't have to go through a watch list that's got loads and loads of things on and go and analyze them all. With this, you click through a list that's already filtered by a lot of the things you want it to line up on anyway. And if it's 3-1, okay, I think this is going to be where we place our trade. Yeah, this is going to be where we place our trade. So, yeah, as I was explaining, you don't want to be looking at each of these individual stocks and going and analyzing them all. The scan's already done a good job at filtering by a lot of the things that we want to line up. And then we can come on here and just very quickly say, hey, does that number align with these things? And if not, no worries, you move on. If it does, great, you've got a trade. Now for this one, the EMA is 20.3189. So that's where it is. And I know it's not quite lining up with the UFO, but as I've explained a little bit already, is that if price were to fall, so too will this EMA line. Now these two UFOs, we're going to group them together because of how close they are in price anyway. In which case, at some point, let's say we have our entry here and our stop loss here. Might be a little bit tighter, maybe there. As price moves down, and bearing in mind our EMA is literally just above us right now. As price moves down, the EMA is likely to move with price, but at a slower rate. That's what that average will do. And they're likely to meet up somewhere around between these two UFOs. So I'm happy with that. It gives us a lot more probability considering that the EMA is much, much closer to our UFO. So we're going to take this. So what I'm going to do now, this is RF. What I'm going to do now is go to TradingView. I'm going to go to RF. And we're looking at slightly different data here, but we're going to use the top data if they don't line up anyway. So in fact, what we'll do here Here we have quite a few UFOs. What I'm going to look at firstly on top is, so it's RF, it's obviously TradeStation data. I believe, I'm just going to double check what the calibration is on my AutoUFOs. 0.5. Okay, great. So, RF Regions Financial Corporation. And this is giving me slightly different data because it's coming from a slightly different exchange. So what we'll do, we'll just ignore that for now. And we will use the data that's come from top. So ignore the UFOs. In fact, I'm going to take them off here. And we're just going to place the trade on TradingView using the data that we have from top. So the data that we have from top, I'm just going to make a note of this and figure this out. Our entry, see this number here is 20.28. That's the top of that band. So the first point in price where we have buyers at that area. So 20.28 is going to be the entry. 20.28. See this here is 19.89. That's the second number of this bottom UFO. That shows us where we have the last really of the buyers within that area. So what I'm going to do is I'm going to take 19.89 and I'm going to take off 10 cents to give it a little bit of wiggle room, which is going to be 19.79. So entry 20.28 and stop loss 19.79. So 20.28 and 19.79. I'm going to take this and I'm going to draw roughly around here because then I'm going to use this as a drawing tool to remind me where it is. So 20.28 is going to be the entry and 19.79 is going to be our stop. So that's the area that we are taking from the top data. Now again, I know that EMA is slightly different here as well. That's because we're looking at slightly different UFOs. So in fact, I'm going to take that off as well so as not to confuse you. We are using the data that's coming from top, that's coming from the exchange through TradeStation. And because this data is the data that we're using, we are going to essentially ignore the data that's coming from TradingView because we're assuming that you would be placing this through the same exchange or the same broker as you would be getting the information from top from. So if that's our entry and stop, then what are we going to be doing? Let's take a look. So first of all, we need to figure out where our first target is going to be. So I'm going to click buy on our order panel. I'm going to put in 20.28. Stop loss is 19.79. See, that's 49 ticks is what it knows it to be. So if I do take profit and I put in 49, then what we can see here is that I've got a one-to-one trade by doing that. Now I do that for a reason because I want to be able to know where one-to-one away is, because that's where we always put our safety targets. Reason for that is because let's say price comes in, hits my entry, goes a little bit in my favor, but then comes against me. Then I've made half the trade, then lost half the trade, break even. If price goes straight through, then I lose the trade, that's fine. We put trades on knowing that we could be wrong and lose them, and we risk what we're willing to risk. If price goes really in my favor, then it will take my safety target as a small profit, and then we'll take a higher profit somewhere up here, and we'll average them out and make money in between. So our safety target is always one-to-one away. Now, what we now want to look at, and we'll come back to top for this, is where are we going to put our final target? So what I'm going to do is I'm going to come over to this left-hand chart, which is our daily chart, and I'm going to add the AutoUFOs to here. And I'll do that as well. Okay, now why did I do that? Because if we are buying, and we're buying in the context where we have probability upwards, we have buyers and buyers at the same place. If we're doing that, what can stop a bunch of buying? A bunch of selling. Our closest stack of big sell orders is where the UFOs show us that they are. Now that's not to say that new sell orders won't come into the markets and change things, but we can only go off of what we see on the chart right now. As things develop and new UFOs form, you may well move your second target, but for the time being, we're going to place it where we see we have the biggest room to take it. So this UFO goes from 22.35, which is the bottom of the UFO, to 22.69. We're going to take the number from the bottom of the UFO because that's the first place that we hit sell orders. So 22.35, that's going to be our final target, 22.35. So again, I'm going to draw it on the chart, 22.35. Just going to double check I got those numbers right. Yeah, 22.35. Brilliant. So now from looking at the data in top, and we are now just using TradingView in order to place the trade, we have our entry at 20.28, our stop at 19.79. We have our safety target at 20.77, having worked that out easily on our order panel on TradingView. And we have our second target, our final target at 22.35 that we got from the UFO data from top. So what we're going to do here, I always do this, risk $50 on each side of the trade, only because that makes the entire trade $100 risk, and then it's really easy to track. It's really easy to know what's going on. If you are if you have a smaller account, then you'd risk less. If you have a bigger account, you risk more. If you're more risk tolerant, you might risk more. If you're more risk averse, you might risk less, depending on what percentage of your account you have at risk at any one time. That's all up to you. I'm using $100 rounded here just to be easy, just to show you and give you an example. So I'm going to press buy, and that's going to be that trade gone in there. And then the second half of the trade will go in. 20.28 is our entry. Our stop loss has been remembered, 19.79. Our profit, in this case, I'm going to actually just type in what the price is, which is 22.35, and risk $50 on that one as well. There we go. So then I can place that trade, and there it's gone in. I'm going to write a little note to remember. So placed 27th of August. Well, that's it. That's all we need to know. Placed 27th of August. Brilliant. So that is a trade. We've gone through start to finish here to place a trade. It's taken a little while longer than it would have normally. I had a few more things to explain today, but hopefully that makes sense. For those of you that are new, hopefully you understand why we ended up placing this trade. If it's overwhelming and confusing, don't worry, just watch more videos, you'll understand more of it, trust me. And you can ask me any question that you have. You can go to tradewithufos.com/Becky, ask questions there so that I can answer it and it helps other people to learn as well. Or you can just email me, becky@traddictiv.com or support@traddictiv.com, and you can ask any questions there. We're always happy to help. Hopefully this trade, as an example, made sense so far. For those of you that might follow me a lot, I know this might have been a bit slower for you than it would have been normally, but hopefully, again, it made sense what we went through, and you can ask me questions if you need to anyway. Right, what I'm going to do now, as we've found at least one trade, I'm going to cut the stream to the free areas that we're streaming so that we can continue in the closed coaching session. So I'm going to cut the stream. Give me a second because it takes a little while, and then I will come to you in the closed coaching session. And I saw a question there from Steve. I'll get to you in the closed coaching session in a second. Let me just finish this here. For those of you watching free, thank you for joining me. I will see you next time. I'll be back on Monday with a market commentary, so I'll see you then. Email me, leave a question on the tradewithufos.com/Becky link if you need me. Otherwise, catch you soon.